Mutual fund fees. Because mutual funds are professionally managed, it's a cost to them. Mutual funds also have different classes. For example, Class A shares. They have an expense on the front end, known as a front end charge. That charge could be 5%, for example. So if you were to invest $10,000 in a Class A share, they would take $500 right off the front end. Then there's the expense ratio. For example, the fund may cost an additional 0.5% annually, regardless of performance. And then there's something called the 12b-1 fees. This fee is an annual marketing or distribution fee on a fund. And this fee typically will range from 1/4 to 0.75%. B shares are the opposite of A shares. They charge high fees on the back end rather than the front end, although if held long enough, they can convert to A shares. They typically have higher expense ratios as well. Then you have C shares. C shares have no front end fees and an exit fee of usually 1%, but that's often waived after 1 year. Now, although C shares have lower expense ratios than B shares, they are higher than A shares. And they do collect an annual fee for marketing, distribution, and servicing.